He wakes up every morning in the same house he bought in 1958 for $31,500. No gold gates, no private island, just a modest home in Omaha. Yet behind that front door lives a man who quietly controls hundreds of billions of dollars. While the world chases trends, he reads 500 pages a day. While others panic, he smiles, because he's already prepared. He doesn't move with the crowd, he studies it. He doesn't follow the market, he waits for it to come to him. They call him the Oracle of Omaha. But to him, success isn't luck or magic. It's clarity, patience, and discipline. He once said, "The stock market is designed to transfer money from the active to the patient." And for over 70 years, Warren Buffett has proven it true, turning small, forgotten businesses into an empire worth more than $150 billion. This is the untold story of how an unassuming man became the greatest investor in history, and the timeless lessons that could rewrite the way you think about wealth, risk, and time itself.
Chapter 1. The Young Oracle. Humble Beginnings in Omaha. In the quiet Midwestern town of Omaha, Nebraska, a young boy sat on his front porch with a newspaper in hand. His name was Warren Edward Buffett. And while other children dreamed of adventure or fame, Warren was fascinated by numbers, particularly the ones printed in the stock pages. At age 6, he began his first business venture, buying 6 packs of Coca-Cola from his grandfather's store and selling the bottles individually for a profit. It wasn't much, but for Warren, it wasn't about the money. It was about understanding how money moved. By the time he was 11, he purchased his first stock, 3 shares of Cities Service Preferred at $38 apiece. The price quickly dropped to $27. Scared, he sold when it rebounded to $40, only to watch it climb to over $200 later. That single moment carved a lifelong lesson into his mind. Patience is the ultimate investor's weapon. Buffett's teenage years were filled with small ventures, selling gum, delivering newspapers, and running pinball machines across barbershops. But beneath the simplicity of these jobs lay a sharp instinct. He was learning the art of compounding, not just in money, but in effort, time, and opportunity. By age 20, Buffett had read every book on investing he could find in the Omaha Public Library twice. He discovered Benjamin Graham's The Intelligent Investor, and it struck him like lightning. The idea that a stock is not just a piece of paper, but a piece of a business, reshaped his worldview forever. Chapter 2. The Making of an Investor, From Student to Protege. When Buffett entered Columbia Business School, he did so not to earn a degree, but to study directly under Benjamin Graham himself, the father of value investing. Under Graham's mentorship, Buffett learned the principles that would later define his empire. Buy undervalued companies, minimize risk, and always think long-term. He famously said, "Price is what you pay. Value is what you get." After graduation, Buffett worked for Graham's partnership, learning the mechanics of deep analysis, balance sheets, intrinsic value, and emotional discipline. But soon he realized something profound. While Graham's method focused purely on numbers, Buffett saw that great businesses are built by great people. In 1956, Warren returned to Omaha and started Buffett Associates Limited with just $105,000, 100 of it his own. He began investing with one unshakable rule: never lose money. Within 10 years, that partnership grew over 1,200%. His method was unconventional. While others chased short-term profits, Buffett hunted for durable moats, companies whose products and reputations could withstand decades of competition. It wasn't long before he found one that would change everything: a struggling textile company named Berkshire Hathaway.
Chapter 3. The Birth of Berkshire Hathaway, a masterstroke of patience. When Buffett first purchased Berkshire in the early 1960s, it was a declining textile firm. Most investors would have written it off, but Buffett saw an opportunity to turn it into something far greater, a holding company for businesses he truly believed in. Gradually, he began acquiring companies with strong fundamentals: GE Ico Insurance, See's Candies, National Indemnity, and the Washington Post. Each was profitable, well-managed, and built for longevity. Buffett once said, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." That philosophy reshaped the DNA of Berkshire Hathaway. It was no longer a textile manufacturer. It was an empire of empires. By the 1980s, Berkshire had stakes in Coca-Cola, American Express, and Gillette. Buffett's uncanny ability to identify enduring brands turned Berkshire into a global powerhouse. What he truly mastered, however, wasn't just investing in businesses. It was investing in trustworthy leadership. Chapter 4. The Power of Patience, Waiting Decades for the Right Pitch. Warren Buffett often compared investing to baseball, but with one difference. In baseball, you get 3 strikes. In investing, you can stand at the plate forever, waiting for your perfect pitch. Decades of patience, years of discipline. Buffett didn't just build wealth, he waited for it. He'd spend hours, days, sometimes weeks reading annual reports. He wasn't chasing trends or breaking news. He was studying fundamentals. His secret? Compounding. Not just money, but wisdom. He once said, "The difference between successful people and really successful people is that really successful people say no to almost everything." Buffett knew that the world rewards consistency, not chaos. His fortune wasn't built on one big bet, but on 1,000 small, wise choices, compounded over time. And while others sought shortcuts, Buffett found serenity in simplicity, trusting that time, not timing, creates true wealth. Chapter 5. The Mentor and the Mindset. Lessons from Charlie Munger. Behind every great mind is another that refines it. For Buffett, that man was Charlie Munger, lawyer, thinker, philosopher, and his lifelong partner in wisdom. Together, they built not just a company, but a philosophy. Munger taught Buffett to expand beyond numbers, to understand human behavior, psychology, and decision-making. Munger's wisdom was blunt. The big money is not in the buying and the selling, but in the waiting. Under his influence, Buffett's worldview shifted. He stopped chasing merely undervalued stocks and began seeking great businesses at fair prices, not fair businesses at great prices. Their friendship became a cornerstone of Berkshire's success, built on candor, humor, and brutal honesty. When Munger passed in 2023, Buffett didn't just lose a partner, he lost half his mind, as he once said. Yet their principles endure: the clarity of thought, the humility to admit mistakes, and the courage to think independently when the crowd roars otherwise. Buffett's empire was not just made of money, but of mental models, a blueprint of rational thinking in an irrational world. Chapter 6: The Crisis Years. Calm in the Storm. When the world trembled, Buffett stayed calm. In 2008, the global economy collapsed. Markets fell, banks crumbled, and panic filled the air. But Buffett, sitting in his Omaha home, wrote a letter that would echo through history. Be fearful when others are greedy, and greedy when others are fearful. While others sold in terror, he invested, injecting billions into companies like Goldman Sachs, General Electric, and later Bank of America. His reasoning was simple. Crises reveal the strong from the fragile, and patience, once again, became his weapon. His investments turned into tens of billions in profit, not because he was reckless, but because he believed that faith in the American system would outlast fear. He proved that courage in chaos is the rarest currency, and that true investors are built, not during good times, but in storms.
Chapter 7: The Philosophy of Giving. The Wealth That Doesn't Stay. Warren Buffett understood early that money is a tool, not a trophy. As his fortune grew into the hundreds of billions, he began to ask a deeper question. What is the point of wealth if it ends with me? In 2006, Buffett announced one of the largest philanthropic commitments in human history, pledging more than 99% of his fortune to charity. Not tomorrow, not when convenient, but now. His giving wasn't random. It was structured, deliberate, channeled through the Bill and Melinda Gates Foundation and the Susan Thompson Buffett Foundation, named after his late wife, who inspired much of his empathy. Buffett's donations would fund vaccines for children, education for the poor, and research for diseases forgotten by profit-driven markets. He once wrote, "If you're in the luckiest 1% of humanity, you owe it to the rest of humanity to think about the other 99%. This was the quiet power of legacy, that wealth achieves its highest purpose not in possession, but in passing it on.
Chapter 8: The Legacy, Teaching the Next Generation. As Buffett entered his 90s, his gaze shifted from building wealth to building wisdom. He began shaping the next generation of thinkers, not through lavish speeches, but through clarity. Each year, thousands flocked to Omaha for the Berkshire Hathaway annual meeting, a modern-day pilgrimage known as Woodstock for capitalists. There, Buffett and his late partner, Charlie Munger, shared lessons not about stocks, but about life. Integrity greater than intelligence, greater than energy, he'd say, because without integrity, the other two will destroy you. He urged young investors to avoid envy, debt, and short-termism, to read, think, and act with independence. For Buffett, the real legacy wasn't his wealth, it was the mindset of rational optimism he left behind. His example became a compass for dreamers who still believe that common sense and kindness can win in capitalism.
Chapter 9: The Buffett Mindset. The Simplest Genius on Earth. When history remembers Warren Edward Buffett, it won't be for his billions, but for his brilliance in simplicity. He lives in the same house he bought in 1958. He drives himself to work. He eats McDonald's breakfast and drinks cherry Coke every morning. Yet behind that modest life lies one of the most disciplined minds in history. A man who mastered patience, logic, and humility in a world addicted to speed. Buffett's success was never magic, it was mastery of emotion, time, and principle. He proved that wealth doesn't come from chasing money, but from understanding value in people,
in decisions, in time itself. He once said, "I measure success by how many people love me, and the best investment you can make is in yourself." The Oracle of Omaha didn't just build a financial empire, he built a philosophy for living. A quiet revolution reminding us that greatness often whispers and that wisdom compounds.
Chapter 10. The Oracle's Last Words. In a world obsessed with speed, Warren Buffett walked slowly. In a time when everyone wanted to be loud, he stayed quiet. And when the world chased trends, he chased truth. From a small boy in Omaha who sold newspapers to a man who reshaped global finance, Buffett never lost sight of his compass: patience, integrity, and compound growth. His story isn't just about stocks or money. It's about character. It's about living by principles that do not fluctuate like markets. It's about believing that greatness isn't inherited, it's learned, built through choices repeated every single day. He taught us that the richest life is not the one with the most possessions, but the one that creates the most value for others. And so, as the world continues to chase the next big thing, the Oracle of Omaha leaves behind a timeless whisper. You don't need to be smarter than everyone else. You just need to be more disciplined than everyone else. A legacy of patience, a philosophy of kindness, a reminder that wealth, at its best, is simply the reflection of wisdom multiplied over time. Warren Buffett may one day fade from the front page of finance, but his mindset, his calm, enduring logic, will forever compound through generations that listened. Because the truest secret he ever shared was this: success is simple, but not easy. And those who understand that will never stop growing. In the end, Warren Buffett proved that wealth isn't built by speed, it's built by patience, discipline, and purpose. Money follows those who master themselves first. So before you chase the next big thing, remember, even the greatest investor in history started by selling Coca-Cola bottles on a porch in Omaha. Subscribe to Factsxup, where we uncover the minds that move the world.